find a way to discipline yourself not to close it early.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so we got a question here from a trader, and he says that he's been a break-even trader, although profitable as a long-term investor, and he's been developing some strategies, and he wants to get out of the cycle where he makes really good progress and then he gives it all back. And so he says, look, it's good that I'm not overall losing money, but I'm not making that much too. And he noticed when he looks through his trading record that he closes trades when they were in profit rather than waiting for them to fully play out. And so that would have been better if he waited a little bit further. And so what I clearly need to do is practice my exits. And this is what I'm doing in Forex Tester in my testing. But how to judge when an exit proves to me is how to judge when to exit is difficult. So when do I exit basically is the question. What are some of your thoughts on that?
Yeah. So I think number one, you go back to your testing, right? Okay. When I don't exit early and I just hit that profit target, sounds like he has a profit target, then, what are the results? And if it's acceptable, then you just go with that and find a way to discipline yourself not to close it early. Second thought on that is that maybe you're just a better investor. Maybe you should just stick to like long-term investing and, kind of double down on that instead of trying to spin your wheels with trading. Maybe your personality is such that it's not quite suited to trading. But I mean, if you want to do that, obviously, then, that's your choice. But I think going back to your records, looking at what happens when you do close it early versus when you hit the take profit. What do you think?
Yeah, no, that's great. I hadn't thought of the you should just be an investor thing. That's actually a good point. Yeah, that's a really good point. It's tricky though, isn't it? Like, sometimes everyone's a really good investor in certain markets. You know what I mean? Like, yeah. I think back to when I was trading stocks in the early 90s. Like, I was a really good investor.
So was most people, right?
Yeah, until 99. Yeah. So, So anyway, but yeah, and I'm sure it was the same in the 80s. Like, if you got into investing in 81, it was great until 87 and all that. Yeah, it's interesting. I kind of think that I almost feel like everyone needs to take a side or decide to be on both teams. And what I mean by that is, I think it's really important to consider what's more important, like what's more painful for you to have 100 pips and then watch the market go another 200 pips and go, oh, I lost out on 200 extra pips. I could have had 300 pips on that trade. Or watching the market go 300 pips in your favor and you're high-fiving yourself, and then it retraces and goes against you 200 pips and you get out with only 100 pips. One of those is probably going to be more difficult. And depending on your answer to that, that means that you should probably focus on profit targets if you find it okay or relatively okay to hit a 100 pip target and then watch it go another 200 pips versus, the idea of having 300 pips and giving back 200 of those. So you only get 100. If that's so painful for you, which is obviously the trailing exit scenario, then you should probably, go with just targets. But you can do both. And that's what I do. So you can have a trailing exit on half your position or a third or a fourth or whatever. And then you can have targets on the other bit. So I usually have a target and then trailing exit, or I have two targets and a trailing exit, depending on sometimes I'll have just a target, but that's kind of rare. Although my yen trade yesterday was just a target. And that was just because it was kind of in a range and I had no reason to suspect it would get out of the range, So I just will use a target in that instance. But so, yeah, so that's what I would suggest. Just figure out which one is more painful. Is it the trailing exit scenario where you give back 200 pips after having it? Or is it the target scenario where you got out and then you watched it go another 200 in your favor? Because one of those is probably going to be something or if you just want to have both a trailing exit and a target, that way, no matter what, you kind of feel like you're right. Yeah, it's tricky though. I think you might be right. Like, it might be something to look at. Am I even cut out? Is this something I should do? Do I still want to do this? Make sure that you have good records and that you're knowing it. If you're taking the trades as you should, like you're getting in as you should, you're getting out as you should, you're following all your rules, because that's really important. So yeah, so that's basically, that's it for me. Yeah, that's my thoughts. Yeah.
Yeah, no, great points. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.